The introduction. I'm thrilled to be able to present BTCS to all the investors joining on this call. I'm going to start by going through our PowerPoint presentation and then answering any questions. So let me just share my screen. All right, great. So this actually is our presentation from February. So I'll have to do some updates on some of the developments that we've announced since this was released. So just starting off with the investment highlights, we're pretty excited this year with what we've been able to develop. So just by way of background, we're the first pure play U.S. public company focused on blockchain technologies and digital assets. We've recently restarted our transaction verification services business with a core focus on securing proof of stake blockchains such as Ethereum. Right now, we're not mining Bitcoin, and we believe that could be a huge revenue driver for the future. We're also developing a digital data analytics platform, and I'll go into that in more detail as we move through this presentation. We're the first U.S. public company to focus on a digital asset treasury strategy, similar to what you see MicroStrategy, Square, and Tesla do, and that's been very positive. We ended up with about over 1,000% gains for 2020 and over 4,000% gains on our cryptocurrency holdings year over year from about mid-February. We're also as management, we're extremely bullish on the company. In January, collectively between myself, Michael, and David Garrity, we invested $1.1 million into the company. What you should expect from the future is for the company to take the steps required to pursue an uplisting to a senior exchange, most likely the NASDAQ. With that said, I think it probably it's worthwhile to go through the industry. So we're pretty bullish on blockchain technology in general. The internet in our mind was basically allowed for the digitization of information, allowed you to take information, put it into electronic format and share that globally, whether that's YouTube videos, pictures, files you're sending, and that's a huge development. What blockchain technologies allow you to do is use the internet to send digital assets globally without a trusted third party. And prior to blockchain development, that was not something that was possible. You would always need a trusted third party, whether that's a securities market, a bank, or whatever equivalent asset you were looking to move. Blockchains, you can think about them kind of as a general ledger that is maintained globally by a distributed network of computers. They're governed by code. They're secured by cryptography. And to date, we haven't seen any of the major blockchains been hacked. So Bitcoin's blockchain is a great example. It's never been hacked. Although you may see in the news stories of exchanges getting hacked, the blockchain itself hasn't been hacked, and that's a great sign after 5+ years, almost 10 years. So that's something where it's pretty excited in terms of a proof of concept. One of the most interesting things about that kind of internet versus blockchain technology comparison is that with the internet, you were really only able to invest in companies that built applications on top of it. So you couldn't actually invest in a specific protocol on which the internet is built, whether that's FTP, file transfer protocol, DNS, IMAP, all these different protocols that allow you to do things, whether that's email, moving files. You could never really own the underlying technology. You could just invest in companies that built solutions on top of that technology. With blockchains, you can actually, through the tokenization of those assets and the way the blockchains are built, you can actually own the underlying protocol. For Ethereum, it's a great example. It is a blockchain-based, it's based on smart contracts where you can build applications on top of it. And because you can actually own Ethereum, and in our case, we're actually validating transactions and maintaining Ethereum's beacon chain, you can earn revenue by securing that network. And that's something that you weren't able to do with the internet. Moving along, there's a lot of different use cases for blockchains, many of which you don't see on the slide. If you've heard of NFTs, non-fungible tokens, you can basically digitize an asset such as art, digital artwork, and then create a marketplace for that. So that's been a great use case. It's been built on top of Ethereum's blockchain. But there's also digital currency as a use case, smart contracts, record keeping, and a lot of these things will likely see either the back end get rebuilt based on blockchain technology, or new applications come out in the future that utilize blockchain technology in these various silos. Cryptocurrency is a first use case. It's not government issued, and I think that's a reason you've seen huge inflows into Bitcoin with the monetary debasement going on with through the government bailouts. There's a huge opportunity for money to flow to secure and inflationary protected assets such as Bitcoin and gold, and the scarce supply really makes them quite unique. Another great use case for blockchains is the securities market. I won't go into a lot of detail on that, but there's a lot of companies focused on building solutions to trade securities on blockchains. Obviously, this is now a little dated from February. That's how fast the industry moves. But we've seen asset prices in Bitcoin go up to almost 60,000. Ethereum's now close to 2,000. So there's been great appreciation in many of the digital assets. It's still very early days for blockchain technologies, and we believe that the development will be quite rapid. So we've been in this for a very long time, since 2014. We're very excited about where the business is going. We think there's a long time to continue to develop and be a player in this space. So with the industry segment covered, I'd really like to dig into what does BTCS do. It's a pretty exciting time for us. Management's extremely bullish about the prospects for the company, and so I'll kind of dive right in. We've been at this 7 years. We're the first US public company to mine Bitcoin and Ethereum. I think we were just honestly too early and didn't reap all the rewards of that. Now in 2020, we've refocused back on transaction verification services, but specifically on Ethereum's proof of stake network, and we're looking at other proof of stake networks. So I think that, coupled with the platform we're looking to build and our treasury management portfolio, it's a pretty exciting time for the future. Our board right now our board and management is comprised of myself, Michael Handerhan, and David Garrity. He's our sole independent director. As I mentioned earlier, we're looking to uplist to the NASDAQ. So our goal would be to add 2 new independent directors to meet the initial listing requirements and strengthen our corporate governance. We're also looking to hire a CFO as well. Moving along. So before I jump into the data analytics platform, I want to talk about our staking as a service, or our staking operations. We don't have slides on that yet, but we will be building those out and updating the presentation in the coming weeks or months. So right now we have 240 nodes running on Ethereum's beacon chain. We've put out a public calculator. We've shared a link to the beacon chain calculator based on the nodes we're currently running. And obviously this changes based on the price of Ethereum. We anticipate that the annual revenue of that could be 1.1 million. It's extremely high margin. That actually will depend based on again the price of Ethereum. But the nice thing about proof of stake networks such as Ethereum is when you're up and running these nodes and generating revenue from that by validating and verifying transactions, in order to do that, you need to purchase Ethereum or have Ethereum that you basically stake and lock up. And our belief is that that digital asset that you've staked is potentially an appreciating asset versus a depreciating asset. So when we used to mine Bitcoin, you would buy a computer. Computer is obviously a depreciating asset. At some point, it's going to break. It's going to either overheat, the chips will die, your power supply will go, or it'll just become obsolete. So that is 100% a depreciating asset. And in that model, you basically have to buy enough servers and hope that you'll generate enough revenue running them to cover the cost plus your operating costs, which is huge in terms of the electric consumption. Whereas with proof of stake consensus algorithms, you basically just need to own the token, which is theoretically a appreciating asset. So if more players come into the market, while our revenue may go down because we'll be sharing it with more network participants, the value of that asset has the potential to appreciate versus 100% depreciating like a Bitcoin mining machine. We're also looking at building a staking as a service platform whereby investors could come to our platform, stake their cryptocurrency in a non-custodial fashion, and we would charge a fee for basically running and operating the nodes that they would delegate their tokens to. And we think that's a great way to gain leverage on the business and drive additional revenue. So that's something we're actively exploring how we can broaden that out. We're also looking to move beyond just validating transactions on Ethereum's beacon chain. We're looking at other disruptive cryptocurrencies that can be secured by proof of stake. And we have 3 criteria that we evaluate when doing that. So one would be the quality of the token, and there are a couple key features of that, meaning what is its market cap, what's the liquidity, what's the technical aspects. Is it a token we believe in and we believe that it can be valuable in the future in terms of its utility? The second criteria really is what's the revenue potential by securing that blockchain and validating transactions on it. And the third is really how difficult is it for us to begin those operations, stake that cryptocurrency, and start operating nodes and validating transactions on that blockchain, and is that worth it based on the other 2 factors? So that's how we're going to look at expanding our staking operations within to broader tokens. With that said, I'm going to move on to our data analytics platform. And basically what we're designing here in building is a platform that will allow users to log on to a web portal, connect through APIs, various exchanges. Right now we're connected to Gemini, Bitstamp, Bittrex, and Coinbase, where it'll import all of their trades. And then they can view and analyze those trades through our platform. Though you wouldn't be able to actually trade your cryptocurrency through our platform. It's a read-only API, so you can get all your performance metrics. And the big thing that I'm pretty excited about here is adding a social overlay where you can come up with performance that's effectively not audited, but reviewed, because we're not going to allow for users to import their CSV and have that count towards performance. But if you were to connect your exchanges to our platform, we'd evaluate the performance in terms of return, and equivalent like a Sharpie ratio. And if you have a good profile, you could allow others to subscribe to your data for a fee. So we think that's pretty interesting. We're still early in the development of that. We're hoping to open it to beta before the end of the second quarter of this year. And that would just be really for testing purposes and to work out any bugs before a broader opening. These are a couple screenshots of the actual platform. And again, here's the overall timeline. On the digital asset strategy, this is something we focused on for much of 2017, 18, and kind of 19, is just slowly building up our portfolio. And this goes back to the point I made earlier, in that unlike the internet, you can actually invest in the underlying protocol, the business logic. So Ethereum's a great example of a smart contract-based protocol that you can actually own the token. Filecoin is an example of a token that you can have data sharing on, right? So that really wasn't possible in the kind of Web 1.0, 2.0 era, and that is in the Web 3.0. We're looking at a couple different buckets right now. We could break it into cryptocurrencies, smart contracts, IoT, computing, and data storage. Right now, we just own Bitcoin and Litecoin. We've been kind of slow to expand into these just because of the requirements in terms of determining if any specific token is a security or not a security, and our disclosure requirements. But as we kind of move forward, we're going to be expanding into these various different protocols. That's on our roadmap. We've done very well with this strategy. We ended the year with almost $4 million in cryptocurrency. And at the peak on February 20th of this year, it was just under 12 million. And we've also raised 9.5 million in a registered direct, and we've put that to work in our staking operations on Ethereum's blockchain. So that kind of wraps it up. At this point, I think I'd like to stop sharing my screen and open it up to any questions.